This is Robert Kraft, and I'm your host for SNN Network. And joining me today is Eddie Geller. He is the CEO of Tiny Beans. It's a publicly traded company. I got two symbols for you: TNY on the ASX and TNYYF in the US. Eddie, how you doing? Good to see you.
Yeah, doing great. Thanks so much, Bobby, for having me on the show.
It's great to have you as always, man. So first things first, before we get into company stuff, personally, how you holding up? Everyone good?
Yeah, everyone's great. I mean, dealing with the whole new normal. Kids are good, family's good. But yeah, all things considered, pretty well, thanks.
All right, good to hear. So now, what everybody came to hear, updates, what's going on at Tiny Beans. So before we get into all that updates, for those who don't know the Tiny Beans story, let's get a quick overview and then we'll go from there.
Awesome. Thanks, Bobby. Yes, Tiny Beans is a mobile and web-based technology platform that really helps connect parents and families all around the world, and through that experience, be able to access content, product, and services to help them in the journey of parenting.
Perfect. All right, so last time that we had you on here was about a year ago. And what would you say are some of the highlights for the company in the last year?
Yeah, it's been a phenomenal year. I guess so much has changed from a market standpoint. I think we've been incredibly well supported now. Obviously, much more liquidity, much more support by the company, and from a business standpoint, huge amount of milestones. So we were selected as App of the Day in the US, which is incredible considering there's I think now over 3 million apps in the App Store. So to be chosen is pretty amazing. We were chosen in October last year and then again in March, about 3-4 weeks ago, which is awesome, especially with everything that's going on with families. We also acquired a company, which is also a massive milestone for us. So we acquired a company called Red Tricycle, largely US company in the parenting space, in the content space, actually. And we acquired them about in January. So 3 months ago, we raised money, we acquired them. And what's great about them is basically as a reach, they had over 20 million monthly visitors. So a huge amount of reach that we'd be able to capitalize on, and also a very vast content platform. So we're at the moment integrating integrating the experience to our users, and really more importantly, the teams on how we can, I guess, shape the business and really take it forward. But yeah, it's been a really big year in terms of the product and some milestones.
Perfect. And I'm actually going to have some follow-ups on some of these milestones, especially the one that you just said in a bit. But, you also announced a number of ad deals and new brand partners in the last year, plus renewing the advertising deal with Lego. Can you tell us a little bit, about the Tiny Beans value proposition to advertisers?
Sure, absolutely. So the value prop is all around, Tiny Beans, because it's its private, trusted experience. We have a lot of information on these families, and more importantly, these families really trust the brand. So the value prop to brands is about if they want to be able to get their messaging, whether it's products, whether it's content, whatever the case may be, to the right user, being a mom or a dad of a 3-month-old or 3-year-old, we can help them get that messaging in there, and not just display-based advertising, really very much more native, much more integrated, much more targeted. So the value prop for brands is around being able to get their messages to the right, I guess, people at the right time. And then from a brand perspective, excitingly, like you said, we renewed Lego. So Lego Duplo ran with us last year. It was the first year they ran with us, and the metrics were off the charts, which is exciting. And then they renewed again this year and actually upsized the partnership. We're even doing more for them this year, which is exciting. And then subsequently, with the Tricycle acquisition, we also signed deals with Amazon, Apple, Kraft, and National Geographic Kids, to name a few. There's actually a whole bunch more we've signed recently that we're going to announce over the next 60 days too. But yeah, it's been a really positive time as the brands and the platform's grown. So has the appeal to advertisers.
Wait, Kraft? I mean, no, I'm just kidding. That's terrible. I'm so sorry for that joke. I
That's
apologize.
all right. If you can do some introductions to the CEO and other people, I'm all there, Bobby.
Let me call the Patriots in a second. I digress. But actually, as a quick follow up, because I'm sure some of my audience members probably have asked you this before. What's a typical spend with some of these brands out there? And then currently, how many people are using the app right now?
Totally. Yeah. So the spend varies. Some brands want to start pretty small and want to do a test. It starts at typically 50K, sometimes 40K, and then some go up to $1 million. I mean, some can go 500,000 as well. It really depends on the brand and the partnerships. The smaller brands clearly are going to spend a small amount. On the Red Tricycle front, they have a pretty robust local business. So a lot of local advertisers like local museums and local schools and local play centers advertise with them. And that's also been exciting. It's not just about large companies, but also small brands too. So for us, it's been around, trying to, form this value prop that also appeals to, large brands and small.
Got it. And real quick on the current downloads or how many people are actively using
Sure.
the app.
Sure, absolutely. What's exciting on that is that over the last 30 days, because of obviously what's happening around the world, more people are at home, grandparents and obviously people are isolated. So we've definitely seen an influx of engagement and user growth. We actually hit a milestone a few weeks ago of a million active in 1 week. So that was 20% up on previous. So at the moment we have on the Tiny Beans platform about 1.5 million monthly. On the Red Tricycle side, 2.5 million. So about 3.5, 4 million monthly combined, excluding social. Social is pretty big reach as well. But really the engagement's really grown. I think the other day we had a record of 500,000 photos added in a single day.
Wow.
Which is pretty enormous. And it just shows you the value prop that I guess families are seeing.
Got it. All right. So I want to now get into the Red Tricycle acquisition. Can you tell us a little bit more about it? What is the background and rationale for this deal?
Sure, absolutely. So by background, Red Tricycle is simply a website. If you go to redtri.com, it's a website that basically anyone can access. It's obviously designed for parents, and it's wonderful content that basically encourage a whole range of things around inspiration of what to do, where to do it. It's very local in terms of locally in LA, locally in San Francisco and in New York, and they have, I think, about 60 markets they're servicing content with. Clearly today, there's not much local activities going on. It's much more virtual. So in recent times, that they've launched their virtual event calendar too, but largely it was really a physical experience. And really they have over 30,000 pieces of content and very large editorial team, and they work on creating this incredible value and I guess reading material for parents to be able to be inspired about the things to do every day, whether it's around Halloween, whether it's about what to do with sleep, whether it's about what to do this weekend in New York City. So it's a large content platform, something that in Tiny Beans we were missing, and also they really appeal to parents of older kids. So Tiny Beans really predominantly for new parents, as obviously being a new dad, it's all about new parents and they're capturing moments every day. But as the kids grow up, you're not necessarily capturing those photos, but you're still consuming content and reading content. So with Red Tricycle, they have content all the way through to 13-year-old kids. And what's great is that now it's all about being able to add value and retain them over periods of time. So really combined, we have a much larger value prop. We can retain the member and the family for longer and offer them more value through that whole experience.
I mean, what's the next brand after that to keep them longer? What, the greenmountainbike.com? I mean, come on. We got
Who knows? My goal is to basically offer value all the way to the time they get to college. So that's our goal. But look, I mean, it's a path to get there, of course. But yeah, I mean, definitely Red Tricycle fits a gap we've always found in terms of that content and be able to offer that to families.
Very cool. Yeah. And look, if you're serious, I'll go in on the business with you. Greenmountainbike.com. Let's go. That's for our teenagers, But,
well, to be honest with you, I think teenagers now are more like TikTok and Fortnite and those other platforms, right? Which I know very little about, but my teenage kids are obsessed with. So we'd have to get into something like that as opposed to Green Mountain Bikes. I think if I offer that to my kids, they'd run away.
Dude, TikTok is so much fun. I mean, especially in quarantine. I know my wife and sister-in-law definitely put some funny ones up there, that was for sure. But we digress again. We're having too much fun today, I think. But so also have to ask, the company just reported earnings. We're actually recording this interview on Friday. What are we? April 24th?
24th, yeah.
So you literally just reported earnings this week. Can you discuss this last quarter and in particular how COVID has had an impact on the business?
Yeah, totally. I guess, like I said earlier, on the user standpoint, it's actually been really positive in terms of engagement and growth from a platform perspective. From a revenue advertising, we definitely saw impacts. We had advertising contracts locked in that basically brands came to us and said, look, we're not going to be doing this at present. We want to push this out to later on in the year. We had a few small cancellations too. So definitely it's been impacted on that front. Having said that, that's one of the main reasons why we reported for the first time forward book contracts. We wanted the market to understand, okay, yes, they've had an impact this quarter because of COVID, but also forward book contracts has grown dramatically. So there's some really high confidence that revenues will return and grow as a consequence of those contracts. So definitely we're positive about the future. The forward book contracts is solid, and the brands are still interesting. What's also particularly unique in the last 30 days is that we've had new brands come to us that haven't run with us before because of the trust and the value prop, because they want to be connected to families much more. And we're now talking to brands around this combined value prop of not just Tiny Beans or not just Red Tricycle, but together. And in the last, I think, 2 weeks, we've signed deals that have bought on both platforms, and they've seen the value of both. And now when we're going to brands, we're talking about a single value prop together as opposed to one or the other. So, I'm definitely anticipating it to grow in weeks and months to come. But overall, I think given what's going on, and we obviously, as you know, other businesses have fallen off a cliff. We've been, really robust, and yes, we've had a small impact, but I think it's just more been moving revenue into other quarters as opposed to having that completely vanished. And from a team perspective, it's also going very well. We're integrating the teams. We're still in recruitment. We're still growing the team in the US. There's still a lot of work we want to be doing. So we feel we're in a really positive spot, and the pipeline really supports that. So it's exciting place at the moment. Post this COVID-19, I think we'll come out even stronger.
Perfect. And then from what you can tell us, what are some of the primary growth drivers now moving forward?
Well, look, I mean, I think that I think over the last month and couple of months, I think people have they probably have reset what's important in their lives, and family has really become the centerpiece there. I think that also bodes well with our value prop in terms of what we're about. I think that's a core growth tenet. We're definitely experiencing, as I said, like growth and opportunities with specific brands. We're seeing brands looking to spend more in certain segments, whether it's consumer packaged goods. We've actually had increased demand in pets because, as you know, you're more at home now, and actually more families are adopting pets, and we have a lot of pet parents on the platform. So pets has really seen some nice growth in recent times as well. And then we're also looking to see growth in subscription revenue because premium is going to be an area of investment this year. So yeah, I mean, we're definitely, I guess, excited about not only the user and engagement growth, but also the core revenue streams as it relates to brand revenue and premium subscription. So looking forward to a great next 3-quarter process for 2020.
All right, we're right there. Eddie, where can my audience go and find more information about Tiny Beans?
Awesome. So the URL of Tiny Beans is tinybeans.com, but the best example is to go to the App Store and the Android Store if you want to sort of check it out yourself, but definitely a lot of information on tinybeans.com. And if you want to check out the acquisition, Red Tricycle, it's redtri.com. And that's the site that has all the parenting content. And over time, we're going to be integrating the two. And then all our sort of social channels that support those two brands.
Eddie, thank you so much for joining me today. I wish you guys the best of luck, and please continue to stay safe.
Awesome. Thanks again, Bobby. Thanks for having me on the show. Cheers.